Hello everyone and welcome back. I am absolutely thrilled to have you here for another explainer. We've got a fantastic setup for today's opening bell, and we're going to take all this complex market data and break it down into crystal clear, actionable insights. Now, you know the Indian markets have been caught in a bit of a consolidation phase recently, kind of trying to find their footing after some pretty wild swings. But as you'll see, the global handover is providing some serious momentum right now. So we're going to do a top-down analysis today. We'll start with the massive macro trends driving global capital, and then we'll zoom all the way down into specific micro-level day trades. It's a packed session, so let's just jump right into it.
Okay, let's dive into this roadmap. Today we're covering global market cues, the Nifty and Bank Nifty setup, the TCS Q1 earnings report, actionable stock picks, corporate news updates, and finally we'll wrap up with commodities and the event calendar.
Starting off with Section 1, Global Market Cues, Setting the Macro Landscape.
Let's look at how the macro picture is building our foundation today. The global cues are absolutely crucial right now because both the US and Asian markets are handing over a distinctly positive sentiment to India. I mean, we're seeing green screens across the board internationally, and it's largely being driven by this massive resurgence in tech and semiconductor optimism. The sheer scale of the investments here is just staggering. Take Micron, for example. They just upped their US capital expenditure to an eye-watering $250 billion. To put that into perspective, that's literally more than the entire GDP of many countries. Plus, they're adding 90,000 jobs. And if you needed any more proof of massive investor appetite, look at the SK Hynix IPO in the US. It raised $26.5 billion and was oversubscribed 7 times. No way you can ignore that kind of demand. Even Meta shares got a nice bump after news broke that they're exploring in-house chip manufacturing and potentially leasing out their AI infrastructure. So, this heavy tech optimism, that is exactly what's fueling the broader positive market mood today.
But, as informed investors, we always have to look at both sides of the coin. Despite all this tech euphoria, there's a crucial piece of macroeconomic data we simply cannot sweep under the rug. The yield on the US 30-year bond has just hit 5.05%. Now, that's the highest level we have seen since 2007, a 16-year high. Some analysts are even projecting this could creep up to 5.5% over the next 12 months. This high-yield environment acts like a gravitational pull on equity valuations, so it's a really critical counterweight to the tech rally we just talked about.
Shifting gears to the geopolitical landscape, we've got to keep an eye on global supply chains. Recent regional tensions are having a direct, measurable impact on maritime logistics. Just look at this drop. Daily tanker traffic in the Strait of Hormuz, which is a massively vital artery for global oil, has plummeted from an average of 33 vessels down to just 13 on Wednesday. Commercial ships, down to just 5. Now, analysts are noting that while oil markets haven't fully priced in a complete closure of the strait, this physical bottleneck is a stark reminder of just how fragile our global energy supply lines are right now.
Moving right along to Section 2, Nifty and Bank Nifty setup, Navigating the Consolidation Trap.
Bringing the focus back home to the Indian markets, let's talk technicals. If you've been watching the screens lately, you know exactly what I'm talking about. We've been stuck in what technical analysts call an inside bar, or a consolidation trap. Basically, after some heavy volatility earlier in the week, the market has just taken a breather. It's trading within a very tight, limited range. And right now, the real winners? They aren't the aggressive buyers or the panic sellers. It's the option writers. They are taking full advantage of this uncertainty. Because the market isn't breaking out heavily in either direction, those selling options are just quietly collecting premiums. They're essentially betting that the market won't move drastically up or down, and well, right now, they're winning. It's a perfect setup for them, but it means day traders need to be incredibly precise today.
So how do we actually navigate this? Well, for the Nifty, the strategy is all about buying the base. Your support zone, your entry territory, is between 23,845 and 23,920. Meanwhile, the major threshold, or resistance one, sits up at 24,138. The Bank Nifty follows a really similar buy-on-dips logic toward its base, with significant resistance looming between 57,357 and 57,562. If you are actively trading today, these are the exact ceilings and floors dictating the market's pulse. Write these down.
All right, on to Section 3, Key Earnings, specifically the TCS report, decoding the first quarter results.
The Q1 earnings bugle has officially sounded. IT giant TCS was the first to report after market hours yesterday. Now, going into these numbers, market expectations were actually pretty weak. People were nervous, for sure. So how did the actual data stack up against those fears? $9.5 billion. That's the massive order booking TCS reported for the quarter. Actually, scratch that. Analysts were only expecting somewhere between $7 to $10 billion, so hitting $9.5 billion shows incredible resilience. And this brilliantly illustrates their deal-winning capability. instantly giving the market a massive sigh of relief regarding top-line growth.
And the beat goes well beyond just the order book. They delivered 4% constant currency growth, which means growth calculated without the distracting swings of foreign exchange rates. That absolutely crushed the gloomy 1.2% expectation. Now yes, margins did contract down to 24%, but let's be real, the market already knew this was coming due to the standard annual wage hikes in April. But here's what's really exciting, the AI component. Their annualized AI revenues grew by 13.5% to 14% quarter over quarter. They are successfully riding that new tech wave. Plus, management confidently maintained their long-term margin target of 26% to 28%. Overall, a very steady, highly reassuring report.
Next up, Section 4, Actionable Stock Picks, Strategies for the Trading Session. Okay, we've covered the macro and the big earnings. Let's get into the micro. Here are some of the top stock picks and trading strategies for today's session, straight from the technical setups of market expert Rajesh Sadpute. First up is Hevells India. It recently saw a breakout followed by a bit of profit-taking. The play here is to buy around 1192, looking for a target of 1250. But absolutely crucial here, keep a tight stop loss at 1180. Second, we've got Premier Energies. This stock is showing fantastic short covering momentum. That means traders who previously bet against the stock are now scrambling to buy it back, which drives the price up. You can buy this at the market price, aiming for the 1140 to 1160 range with a strict stop loss at 1070. Like I said before, in a consolidating market, those stop losses are your absolute best friends.
Section 5, Corporate News Updates covering M&A, approvals, and recalls.
Let's shift gears to some rapid-fire corporate developments. These are the specific news pegs that are going to dictate stock-specific momentum today. And wow, this first one is a fantastic example of a market rumor transforming into hard reality. The initial leak regarding Apollo Microsystems and Premier Explosives hit the market way back on May 25th. Then, the chatter flared up again on June 7th. And finally, on July 9th, the deal was officially confirmed for a massive 1,550 crore rupees. Apollo is acquiring a 41.3% promoter stake, which will be followed by an open offer at 698 rupees per share. This is a huge synergy play in the defense and aerospace sector. It solves Premier's execution issues and totally expands Apollo's value chain.
We've also got 3 other major corporate updates you need on your radar today. First, the long-awaited joint venture between Dixon and Vivo finally approved. Dixon will hold 51% and Vivo 49% to manufacture smartphones and electronics. Second, Dr. Reddy's has successfully cleared up those quality issues surrounding its semaglutide product, confirming that their supply targets for Q3 and Q4 remain perfectly intact. But interestingly, right next door in the pharma space, Torrent Pharma is going the exact opposite direction. They're choosing to recall some batches of their semaglutide injection disposable pens. It's really a tale of 2 pharma companies today, so keep a very close eye on all these tickers.
And finally, Section 6, Commodities and the Event Calendar, closing out the day's outlook. As we head into our final stretch here, let's zoom back out to commodities because they have been highly volatile this week. So the crucial point is understanding the contrast in strategies here. Crude oil has cooled off nicely by about $5, bringing it down to around $76 a barrel. The strategy here is strictly buy on dips at $67.50, anticipating some short covering. On the flip side, we have silver. Boosted by the lack of interest rate hike chatter in the recent Fed minutes, precious metals have some serious upside momentum right now. The strategy for silver is to chase that momentum, buying around 22,400, targeting 22,800. So it's 2 completely different technical approaches for 2 very different commodities.
All right, wrap-up time. Here's your rapid-fire event calendar for the day. These are the macroeconomic data drops the market will be digesting in real time. On the political front, PM Modi is wrapping up his 3-nation tour in New Zealand. Financially, we are eagerly waiting on the AMFI to release the June mutual fund industry data. That always tells us a lot about retail investor sentiment. The RBI is also stepping in to auction 32,000 crore rupees in government bonds today. And for all the energy traders out there, keep your eyes on the clock at 2:30 p.m. because that's when the International Energy Agency releases its highly anticipated monthly report.
So what does this all mean for the opening bell? With a strong global handover, a massive earnings beat from TCS, and highly specific support levels established, will the Indian markets finally break out of this tight consolidation range? Or, being a Friday, will traders simply succumb to the temptation of weekend profit booking? Keep your eyes glued to those resistance thresholds we discussed earlier. That's all for today's explainer. Trade smart, stay sharp, and we'll see you next time.